Hey gang, today is September 23rd. It's Monday, and I missed all of you. I wasn't here last few days of last week. I was traveling to Houston. I was actually doing some video shoots with Rob Booker. He's a very well-known Forex trader, and a lot of times we do things together. I'm sure you guys will see that in the next few weeks. Anyways, I'm back. I'm back in my lab, and let's talk about this week's market action. Not expecting a lot of market action, except for maybe consumer confidence tomorrow and Richmond Fed Manufacturing Index. The market is expected to be fairly slow, unless we hear some crazy news from China or Trump again. Expect slow trading action till the second part of this week. GDP, that's the big report this week. Jobless claims as well, but the big report is GDP. Here's what you need to know, all right? This is important. The consensus is 2%. That's been the consensus for a while now. If the number is below 2%, okay, that means the economy is slowing down. That means the Fed is on the right track lowering interest rates. And that means the bond market should rally. Long bond should rally. Remember, inverse relationship between interest rates and long bond, okay? If the number is 2.2, 2.3, 2.4, if it's showing strong, that the economy is strong, that means the Fed is going to be let's just say not justified in lowering rates as aggressively as they've been doing so. And that means the bond market will probably go down and interest rates will edge up a little bit. I'm not expecting much of that. I'm expecting the consensus to be within range, and I'm expecting the economy to be right in line with expectations. I'm not expecting major surprises, so do expect 2%. Now, let's go to our dashboard, look at the market action. This is the bond market. Keep your eye on ticker symbol TLT. You could trade this with any broker. Now, here again is what I was talking about. If the GDP is below 2%, all right, that's going to worry the Fed, because that's going to imply that the economy is growing slower than the 2% expected, and then we can expect the bond market to rally. If the report is really positive, like 2.3, 2.4, which again is not expected, then the bond market's expected to cool off a little bit. Again, I'm not expecting that. I'm expecting the number to be right at 2%, maybe 2.1, 1.9. I'm expecting to be just in line, which will justify the Fed lowering rates just a little bit. Now, let's look at the stock market. I hate to say I told you so, but I told you guys nothing's going to be decided with China anytime soon. Trump told us that in his tweet on Friday, basically that they're not really negotiating that aggressively right now, or they're pulling out, or something negative towards the negotiations with China, and the market tanked, and I'm expecting the market to slide back to the 50-day moving average. Now, remember what I told you. You got to keep your eye on the Russell. Don't look at the S&P 500, which we just looked at in isolation. The market, the S&P 500 is just 500 stocks. Take a look at the Russell 2000. These are 2,000 medium cap stocks. Notice, let me look at a 1 year time period. Notice we've been going choppy. We haven't really moved anywhere in 6-7 months now. Actually, about 8 months now. Till China gets resolved, the small caps are going to be sideways, choppy, range bound, moving up and down with the 50-day moving average. Right now, we're moving lower. This is going to put pressure on the broad market. And if that puts pressure on the broad market, that's going to keep the S&P sideways or choppy. This is the NASDAQ 100. And let's look at it on a good time frame. Let me put it on the kind of charts you guys like to look at. And again, notice we didn't make an all-time high like we did on the S&P. S&P just made recent highs. Let me show you. I don't know why it defaults to intraday, but it does. But notice we made all-time highs here on the S&P right around beginning of August, late July. I believe it was actually maybe the last day of July, first day of August. But if you look at the NASDAQ, that didn't happen till, let's see here. We hit all-time highs back around September. So again, we haven't hit all-time highs recently. we're still trying to get back our previous momentum levels. And the market is choppy. Here's how it looks over a year. Here's how it looks over 6 months. NASDAQ techs are not making new highs. And either is the Russell. Here, you can see it right here. See, very choppy. Till we start seeing the Russell come up here towards, let me go a little higher. Till we start seeing the Russell come up to about the 170 level, 172 level, not expecting a major rally from this SPY. Expecting much more of a sideways choppy action with the 50-day moving average being hit. The momentum levels right now are overbought. Right here, RSI is overbought. We're moving lower. Not expecting a lot of positive trading action from this market, especially if the Fed does not give us a surprise with the GDP, because the stock market needs a catalyst, and we're not seeing one right now. Earnings were So again, choppy, sideways trading action, defensive positions, utilities leading. Don't get suckered into these rallies. Be very defensive and stay with defensive stocks. Wait to trade speculative stocks till we hear something positive from China. And I mean really positive from China. Not like we're going to start working things out in 2 months. That's not positive news. That's nothing. We're way past that. All right. Today is the 23rd. I'll update you guys tomorrow on the 24th. Folks, very important. If there's a video you guys want me to cover a topic on or a stock, send me an email, support@marketgeeks.com. If you guys like this channel, like us, subscribe to it, and post some comments. I'll respond. I promise. I'll send you an email or I'll post a comment on the chat box in YouTube. Talk to you guys soon. Take care. Bye. Have a great week.